Hello, good evening, traders and investors. This is Alex from MarketWise Asia. Thank you so much for tuning in and being on time today. Okay, so as usual, today it is a Friday evening, 23rd of September 2022. Okay, so if you guys can hear me loud and clear, please say a hi to me in the chat box. And this session is broadcasted on both Facebook Live and also on YouTube as well. So wherever you are, right, thank you so much for being here and being on time today. So smash the like button, give it a share, and if you are on YouTube, give me subscribe to our YouTube channel as well. Liking is free, doesn't cost you money, but it tells Facebook and YouTube that you want to see more of MarketWise Asia content in the future. Okay, so give me a like, share, or comments. Let me take a look at the comments right now. Hello, Mary, Catherine, Dave, Juki, Vincent, Achuan, Bun Sing, Yue Lam, Pauline, Steven, Simon, okay, Rajrab, Bun Sing, Sajid, Cat Sauce, okay, Grey Cat Sauce, interesting nick, okay, Kenny, Jessica, Mark, Gary, Haley, Anthony, okay, Sukling, Yogi. All right, so if you are new to me, okay, I'm very friendly, so please say a hi to me in the chat box, okay? I really appreciate that you guys are attending this Facebook Live or YouTube session with me together. So right now we have about 123 people in the room. Henry, Paywan, okay, ST. Okay, so as usual, okay, Facebook Live, but today, I think you guys can see on the top right-hand corner, right? So today's live session is proudly sponsored by Pepperstone. They are one of the top leading CFD and Forex broker in Australia. Okay, so let me go through my screen right now. We are still early, okay? Just started 11:33. There'll be more people who are streaming in, okay? So let's have some housekeeping, some announcement to make first. Okay, so let me go through the screen right now. I hope you guys can see my screen. So as usual, a disclaimer first. Whatever I share today, it is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. My opinion doesn't mean that I'm right. Okay, so please do your own due diligence. Okay, let's get started. So as mentioned, today's live session is sponsored by Pepperstone. They are one of the leading CFD broker in Australia. And okay, and I have something special for you guys, and it is free. It is totally free. Okay, so I think last weekend, there was a closed door Pepperstone talk. Okay, being held at the MBS Marina Bay Sands. So this is a closed door event. It is a very small group. So I was there. Actually, it's meant for their premium clients. So yeah, it is totally closed, and there were a few keynote speakers down there. And right now, okay, it is Pepperstone is going to give you for free. Okay, let's head over to this link over here. I'll share the link in the comments, okay, or in the chat, wherever you are on Facebook or on YouTube. So if you head over, this will be the site that you will be seeing. So this is trading in uncertain times. So as I mentioned, this is actually for their premium client, and it is also a small group, not for public. And right now, Pepperstone, because this is sponsored by Pepperstone, they're going to give it free for the MarketWise Asia audience. That is you. All right. So very simple. Okay. So you just need to click on the sign up to watch the full video. So before I go into that, right, I can let you know that the keynote speaker are Ray Barros. Okay. So for those who are familiar, Ray Barros has been also he was one of the keynote speakers in one of our Market Insights Virtual Summit also. So Ray Barros, Spark Liang from Malaysia, and Karen Fu. These are the three speakers that's on site. And there was also Macro Elf that was doing a live webinar during the session itself. So this was a live face-to-face session. So three live speakers and one over the webinar over to talk about this event over here. So the session is on the trading in uncertain times. So you can head over to the link and check it out. So what I'm going to tell you is that how do you do to get this full event video replay for free. So just click on the sign up to watch the full video over here. So once you click onto the link, you'll be brought to this Google form. So all you have to do is just to fill up your name, email address, country, region, contact number, and such, and just click submit. Okay. And as this is a Google form, right, so you won't get the replay immediately. So do not expect, I repeat, do not expect to get an instant replay to your email. So the Pepperstone team will gather all the data and such, right, and they will send it out. They told me that they will send it out on the 1st of October. Send on the 1st of October to you. So all I have to do is just to register first, or do all this your details over here at this form over here. And okay, this is actually free. But okay, if you really don't want to miss any of the Pepperstone talk over here, so a lot of times Pepperstone will give a lot of webinars, free talks by their in-house analysts and such, right? So it's all free. Okay, you can also not subscribe. So you can also open an account with them. All right, trade now. And you do not have to fund anything, okay? You can just open a live account. Open a live account is free. You don't have to fund it. And in the future, if there's any exclusive talks, okay, only for Pepperstone client and such, they will also send you the details as well, okay? So Pepperstone, right, they are, as I mentioned, they are one of the leading broker in Australia. They have tight spreads, as low as 0 pips, okay, with fast liquidity and no recourse, fast and reliable, 95.95%. Fill rate and no dealing desk intervention. And they are also an award-winning broker, and they have multiple platforms. So they have MT4, MT5, C Trader, and it is also linked to TradingView, which means that you can trade directly with TradingView itself. Okay, so once again, I will share with you the link in the comments in the chat. Okay, all right. So secondly, there's this Market Insights Virtual Summit that's coming up on the 29th and 30th. All right. So I also posted the link in the comments. So do register for this event, and if you head over to the landing page, you should see this link. So Tom Basso is the keynote speakers at American Hedge Fund and one of the original market wizards, and we are just about 1 month plus, about 5 to 6 weeks away, okay, coming up real soon. So all I have to do is pre-register your interest right now, okay, and I'll give you the bonus materials and when they are ready. And this bonus material, they are going to be ready next week. So most likely, I'm going to send you the bonus material, okay, next week, early next week. So give me some time. So once you register now, okay, you'll get it next week, not immediately. So this, as I mentioned last week, right, this ETF cheat sheet is the one that I'm going to give you, the ultimate ETF trading cheat sheet. Okay, so I've added in a lot of others, updated the key ETF as well. So right now there are about 250 ETF based on sectors, industry, teams, okay, and what else? Indices, okay, fixed income, countries, okay, commodities, currencies, and such, updated a lot more. So there are many insights. And I will also give you this, ETF trading cheat sheet bonus training video. So these are the free bonus material that are sent out when you pre-register for this event, and you get it earlier than the rest of the other people. So just fill your name, email address, mobile, and you are good to go. So once again, I will share the link in the comments over here. All right. So we also have a Telegram channel, YouTube channel. If you're watching this on YouTube, please subscribe to our YouTube channel. Just click and you're good to go. Okay. Yeah. All right. So I think that's all for the announcement. Okay, enough for the announcements for today. So thank you so much for still staying with me. Okay, all the announcement. Okay, but they are really good stuff. Free stuff, bonus stuff, good materials. So do head over to Pepperstone and also our pre-registration page. Okay. So right now, the market today, it is actually very, very red today. So just a quick show of hand, right? How many of you, are really bearish, okay? Or you think that, okay, the market has more downside to go within the next few weeks or so. If you're really bearish, just type bear in the comment, okay? But if you think that we are somewhere near the short-term bottom within the next few weeks or so, the market, it is going to turn higher up. If you are this kind of thinking, we have a short-term rally coming soon, just type bull in the comment. Are you in the bull camp or are you in the bear camp? Okay, just type in the comments. Or I take a sip of water. All right, by the way, I just bought a writing pad recently. Okay, so right now, I can write better now, I suppose. So let me try. No, it's over here. Okay, so yeah, I should be able to write better over here. Oops. Yeah, I should do it properly. Yes. Just test. Still not used to it, but I should write better lah. Okay, yeah, anyway, I might not use it, but see how it goes later, okay? So let me see the comments right now. Okay, so let me see. Wow, a lot of comments. Let me scroll back the comments. So bear, Mary bear, everything bear, tiger bear, rebounds coming. Okay, bear. Henry say boo, Emmanuel say boo, Steven say boo. Actually, it is still pretty mixed. Pei Wen say bear. Okay, Pat say boo, James say boo. Yeah, actually, somehow it's still like mostly say bear. I would say that about 60%. Okay, say bear, 40% is like boo. So it is still pretty okay, pretty even. Not all bear. Christopher and Albert say bear. Okay. Anyway, after the FOMC rate hike, right? The market just tanked all the way. In fact, when the CPI data was out on the 13th of September, the market has already been tanking already. So as usual, nothing new. It is all about inflation. So this again, it is not new news already. This is old news already. Okay, if you've been following the FOMC, you should know this. So, okay, so this is all about the interest rate hike. So, okay, the interest rate hike 75 basis point. It is expected. Okay, it is expected. You can say that it is being priced in. So nothing, no surprises. Okay, 75 basis point is expected. Okay, to 3.25 range. But what is not expected, it is that the Fed actually it is going to be more aggressive in hiking rate in the future and into 2023. This is what the market it is not expecting it. Okay, that is what spooked the market and the market came crashing down. So I repeat, 75 basis point was expected, but what was not expected is more aggressive stand by the Fed. They are hiking the interest rate to 4.6% in 2023. As I mentioned, right, investor has expected 75, but not higher for longer. Okay, so this is what causes the so-called the mini crash ever since the Fed hike. Okay, can go through the news over here. So yeah, so hiking into 2023, right? So is policy rising to 4.40 by the end of this year and topping out in by 4.6%, okay, in 2023. So this year will be very, very aggressive until the end of the year, until December. Okay, all right. So this is up projection from the previous projection from 3.4 to 3.8. Now it's 4.4% until the end of the year. Yeah, that's right. So it's the hawkish comments by the Fed. All right. So this is nothing new also, and the rate hike probability, okay, nothing new also. So I mentioned that before, so I'll post a link in the comments in case you don't know about this rate hike probability site over here. This is by the CME Fed Watch 2 over here. So right now it's already 3.25, correct? So until in November. So right now in November, right? So there is a 75% chance, okay, 75% chance, okay, the Fed will hike 75 basis point. Okay, so this is also pretty expected, okay, and until into December, and there's also a 73% chance that the Fed, okay, will hike 50 basis point. Okay, so until the end of the year in November, the Fed will hike 75 basis point, and in December the Fed will hike 50 basis point if nothing goes wrong. I think most probably they will do as expected. Okay, if you know what I'm trying to say, okay, understand what I'm trying to say, just type 7550 in the comments. 7550 in the comments. Okay, let me drink some water again. So tonight's session, I think should be pretty short. So should be about 1 hour lah. So let's take it, try to keep it slow and steady, chill a bit. Okay, 7550 until the end of the year. Okay. And let's go to the fear and greed index right now. So I think it has been quite some time, since I showed this fear and greed index, right? Okay, what do you think is the index right now? I think you guys should know lah. Okay, so this is by CNN, the fear and greed index. So right now we are at the extreme fear right now. So for the past few days, the market has been tanking like mad. So it feels to me a bit like too extreme capitulation right now. Okay, so we shall see how it goes. Later I'll share with you my personal view. Okay, so yeah, so like Henry said, it is now at 25% extreme fear right now. So as of now, later you can see some stars over here on this chart over here, right? So later I will share with you what it is, all this star right now. So the Nasdaq today, it is already down 1.9%, okay, and the S&P is already down 2% right now. Okay, so talking about that, the retail investors, I have given up. So let me share with you. Let me see, where is this thing? Okay, over here. Okay, I have this chart over here. I thought I didn't save it. All right. So this was by the sentiment trader from the Twitter account. Okay, you can go search for it. So it says that retail investor and traders have given up. So this is by the AAII, some investor association in the US, where all the retail traders are together. So this is a kind of a poll over there. Okay, so this week joins just 4 other years in 35 years, with more than 60% of the respondents being despondent in the AAII survey. But however, okay, once this level is hit, more than 60% was very bearish. Okay, 1 year return later, okay, was up 22.4%, 31.5%, 7.4%, and 56.9%. Okay, so this was the chart that I'm showing. Okay, so I think, as I mentioned, right, out of the 35, it is only 4 times it happened over here. So the first time, I think, was somewhere near, I think, 1990s. Okay, all right, and then market subsequent rally. Okay, and then in 2008. Okay, and then market just rally, and this time around we are at that crucial point in time where almost all the retail traders kind of have given up on the market. It's like very bearish lah. Okay, it's very bearish right now. Okay, of course, they added, is it this time, is it different? Most people will say that this time is different. This time is different because of the quantitative tightening for the past 15 years. The market has been printing, the Fed is printing money, and this time now they are taking back all the credit and such, and tightening, and plus the recession coming in. All the free money for the past 15 years is going to have a bad ending. So is it this time? Is it different? Okay, I don't know. I don't have the answer. But right now, I do know that the market sentiment, it is extremely bearish. It's extremely bearish right now. Okay, it's like, wow, really all given up hope already. Okay, and of course we can't avoid talking about the bonds and the yield curve right now. And right now it is really inverted, the deepest inversion. I think, don't know for how many years. I forget the exact years really. I think it's deepest inversion. So if you talk about the yield curve inversion, right? So this is the 10-year minus the 2-year yield right now. So it has inverted quite deeply, way below the 0%. So once it crossed 0%, okay, this is the inversion. Okay, so I think it is 10 minus 2-year yield spread. Okay, let me show you. Okay, this is the side over here. Okay, so I will post the link in the comments over here. So maximum max. Okay, so you can see over the chart over here. I zoom in over here. Every time there was a yield curve inversion, of course, 1980 is very deep. Okay, I think for the past how many years, yeah, this is one of the deepest, excluding the 1980s. Once it inverted, the recession is coming, inverted. Okay, inversion over here. a recession is coming, okay? Inverted, there's a recession, inverted, there's a recession, okay? 2020 was a very short inversion, then there was a recession because of the COVID. Right now, there is a inversion right now, okay? There's an inversion right now. This one I already mentioned already also in my previous Facebook Live, nothing new. This is just a recap, but there is a lag time. As I mentioned, the lag time could be 6 months, 1 year, 2 years, nobody knows. But high chance probability that there could be a recession. Okay, there could be a recession. All right. So the Fed has already said there might not be a soft landing. I think this is after the rate hike after 2:30 when he speak, right? He mentioned that there might not be a soft landing. So he removed the soft landing. So that he said there will be some pain. So this is he kind of already forewarning to the traders and investors that we are going to take it hard. Okay, we're going to kill inflation, but there's going to be some pain ahead. Okay. And yeah, so right now the 2-year yield, it is at 4%. This is actually quite ridiculous, okay, at 4%. So if you go to this site stock chart, they have this yield curve, okay, yield curve chart over here. So let me go through this. This is the dynamic yield curve. All right, whether you are a paid customers or free, okay, I think you can see the chart as well. All right, so I posted the link in the chat. Okay, so this is the dynamic yield curve over here. So ever since 2008, the market has on a uptrend move. Okay, so this is a inverted yield curve. This is an inverted yield curve. So how does a normal yield curve looks like? Okay, right, this is a normal yield curve. This is normal yield curve. Okay, right, this is a normal yield curve where the interest rate is the highest when the bond term is the longest. This is obviously right. You're putting money in a 30-year yield so long, you expect a higher return because you lend the money to the government for so long that you expect a higher return. So longer term, 30 years, highest return. The shortest, lowest return. This is common sense, right? So this is a normal yield curve. So a normal yield curve will look like this kind of shape. So you can see right now, ever since like that, since at the start of the year, okay, starting to flatten already, flat, and right now it has inverted, okay, inverted like that, where the 2-year yield, it is given a 4% interest rate, the yield, compared to a 30-year yield, it is, I think about 30-year yield, it is at about 30-year yield, it is at, only at 3.6%. So 30-year yield at 3.6%, while the 2-year yield just shot up all the way at 4%. So imagine you are a investor, long-term investor, okay? Right now at this moment in time, where would you put your money in? Okay, is it in bonds, or is it in stocks, or is it in crypto, or is it in REITs, or is it in some saving account in banks or such? Where would you put your money in? Okay, right now just a 2-year yield, it is 4%. This is a US A grade, AAA grade, government bond. Okay, won't fail. Okay, of course, it could fail, but the probability is very, very low. It could fail, but it is very low. So it's like as good as 100% chance that you could get back the money within the 2 years. Okay, AA grade. So yeah, prior to that, if you invest in dividend stocks, or in REITs, okay, you can get like I don't know, 5%, 6%, that kind of average kind of return for dividend yield. But these are riskier assets because you're talking about REITs, dividend stocks. At the end of the day, they are still equities. At the end of the day, they are still equities. So they have a downside risk. But right now, if you just hold for the full term, 2 years tenure, right? 2 years, you hold for 2 years, you don't sell in the secondary market, okay, you get a 4% yield. Okay, of course, the money will flow to the to the bonds, right? It is definitely go to the bonds. Of course, fixed D, okay, will follow the yield as well, Fed fund rate, packing with them and go in higher as well. So yeah, no, the right now it is kind of a no-brainer that most long-term investor will park their money into the bond yield lah. So yeah, this is the kind of environment right now. So as long as the yield don't come down, okay, as long as the yield don't come down, okay, as long as the yield doesn't come down, okay, it doesn't come down, right? The equities market will continue to have a slide. This is what I am, yeah, I am guessing, okay, and yeah. So yeah, suddenly lost my train of thoughts. Yeah, so the U at 4% right now. So looking at the USD right now also, okay, the dollar index, because of the yield is going higher, interest rate is going higher, and because of the interest rate going higher, US dollar is more attractive right now, okay, because people are demanding US dollar to buy the bonds, whatever it is, okay, demanding the US dollar. So US dollar is also shooting through the roof, okay? All right. So James is asking, how do we buy such bonds in the, you mean for the US bond, you can buy the, Singapore bonds, or you can buy the Singapore savings bonds, though they are also rising in tandem. I didn't really monitor the Singapore savings bond and the Singapore bonds. Of course, if you are a high net worth people, you can get access to all these private banker deals where you can get good bonds, okay? Yeah, but yeah, so it is, you can check the banks and such, okay? So you definitely can get this, okay? So right now, the dollar index, right, is shooting through the roof. So yeah, so as I mentioned, I think in my few Facebook Live ago, all right, this was the monthly time frame. So this is a dollar index. So as I mentioned, right, for the past how many years? 50 years, 50 years, okay? It is 40, 50 years is in a secular downtrend, So right now, this month, this is a monthly time frame. This is a monthly time frame. So every single bar candle is 1 month over here. Okay, 1 month over here. So is this going to be really a breakout over here? Okay, it is going to be a breakout over here. Okay, and going to go higher. Okay, if this is going to go really a lot higher, okay, then as I mentioned, this is going to have a impact on the equities market as well. Okay, at least for the short term. Okay, at least for the short term, because interest is going to go higher and such. So of course, this is just a monthly candle. It can do a false break. It can do a false break and go back down again. But this will take at least 2 to 3 months. So maybe how this thing will play out, maybe until the end of the year, we will have a better idea. So you get what I'm trying to say, right? So let's say this is a full breakout right now, okay? If it is a false breakout, another month, next month, and then go back down again another month. So at least about 2 months, okay, 1 or 2 months to show whether this is really a breakout or a false breakout. If this is another bullish month, then the market can continue to head higher next month or the next 2 months, then this is most likely it will be a confirmed breakout already. Okay, and this will in turn, as I mentioned, bring pressure to the equities market as well. Okay, so if everything is good so far, understand what I'm trying to say, just type good in the comment. Okay, type good in the comment. So Pat is asking, will the dollar crash with it come down? Going up this way looks scary. I'll be totally honest with you, I do not know the answer. Okay, if you have been trend following the dollar index, you should be very profitable on swing trade on the position trade on the dollar. Okay, so talking so much, right? I can tell you, it might make you feel a bit knowledgeable about the bonds, about the yield, about the everything lah. But it is it is not really actionable, correct or not, Tiobo? It is not actionable. So right now, at this point in time, so should I buy or should I sell? The fundamentals, the yield is going to go up, and such. Okay, so at this point in time, let me ask you a quick question. So for within the next, okay, let me say within the next 1 to 2 weeks lah. Okay, 1 to 2 weeks. Okay, Should you buy equities or should you sell equities? More actionable one. Do you think you should buy or sell within the next 1 to 2 weeks? Buy or sell? Let's say you are doing a swing trade. Okay, if you're doing position trading, holding for a few months until the end of the year, okay, should you buy or should you sell? Should you buy or should you sell? Okay, right now you already know the narrative already. Okay, the narrative is that the Fed is going to be no surprises. It's going to hike next month 75 basis point, 50 basis point, and such. Of course, there will be the CPI data. The CPI data, when is it going to go out? CPI data is going to go out coming out in October 13. So less than a month away. And judging by the crude oil prices and recently prices of the crude oil, okay, crude oil has been coming down, okay, coming down today. It's just crashed 6% down, okay, as in down all the way, okay, down all the way. Natural gas also down, okay, it's down ever since the June peak. It's coming down. So all the metals also has been coming down, okay. Commodities, okay, are also going down, starting to go down. So I think no doubt about it. I think about maybe a very high chance that inflation has peaked. Okay, has peaked. Peak as in it will not go higher than 9.1%, which is 2 months ago it was 9.1% year on year. Okay, year on year. And judging by all the commodities, everything is coming down. I believe inflation has peaked, but it might not go away. So inflation might still stay at about 7 to 8%, that kind. Okay, this one I'm not very sure. We will see how the price go, and because the core inflation is still increasing. So I think it will still stay about 7-8%. Okay, all right. So yeah, inflation has peaked, and if you actually remember, based on Larry Williams sharing, based on the previous summit, okay, he actually mentioned that every time when inflation has peaked, okay, the market will rally. The market will rally. Okay, so whether this thesis will play out, we shall see. Okay, we shall see, and we are heading into October. Okay, before we go into the November and December, where typically, okay, it is more of a bullish month, the Santa Claus rally. Okay, so I think we can still kind of hang on there. The market hang on there. Okay, if you're going to fall, right, it could be a few like how do I say it? Okay, you might break the swing low, that kind. Then maybe then November, December, then start to go up higher. So will this thesis play out? No, we shall see. Okay, but Larry William, okay, if you watch his previous latest video on YouTube, he is still actually bullish on the market. It is still actually bullish on the market. In fact, a lot of people are bearish on the market, fundamental wise, technical wise. They are all bearish. Okay, only a few are actually still bullish in the market. Larry Williams is one of them. If you watch Adam Khoo video, it is also still bullish on the market. Okay, all right. So talking about that actionable. All right. So Jim is asking, would you consider shorting? So let's go back to the S&P 500. Right now, I will not short. Right now, I will not short. Okay. If you have been watching my live, okay, I mentioned that I'm staying out of the market, equities market, because if you remember 13, okay, 13 of September, there's this CPI. Okay, so it is releasing the CPI data, so market can swing either way. So I don't want to take the chance, so I stay out because of the CPI data. And then this week, Wednesday 21st, right, there was this FOMC meeting, so very near to each other. So I also didn't take any action on it or trade any equities because too near to ready. So the market can swing either way. Of course, if you really hold your shorts, then of course you big pot all the way down. But if I don't have any position, which I didn't have, so I didn't take any position. So I just this for the past 2 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, yeah, for the past 9 days, 9 trading days, about 2 weeks now. So I didn't short anything. So I did not short anything. I did not trade the equities market. So right now, You ask me to short right now, I think cannot lah. I think a bit TMP tao nao pai lah. You want to short, you short here, or you want to short here lah. Now right now market is like extremely bearish at the bottom. Then you ask me to short, and if you want to short, it is also pretty near the swing low already. So make no sense to short lah. So at least in my perspective, okay, okay, can the market go like that? It could lah, but the probability is lower. So I'm not shorting right now, okay? And I'm going to show you this proprietary indicator that I have. Okay, look at the stars over here. Okay, I won't show you what is this proprietary indicator, so I will keep it as a secret. Okay, my own little secret. All right, so right now the star, this is flashing a bottom signal today. This is the first day, bottom signal. So can the market go higher? Okay, I don't know. Okay, I want to let you know that this proprietary signal that I have, it does not tells you the magnitude. Okay, it doesn't tell you that the market is going to rally, or this is the end of the bear market. Don't rally like that. No, it doesn't. Okay, it just tells you that the market could have a bottom, a short-term bottom. Okay, equal a short-term bottom. So prior to that, I can see that over here, my indicator actually show over here, this star over here. Okay, it could bottom out. So price actually really bottom for a while, for a few days, and then came back down again. Okay, so prior to that, previously, there was a bottom signal over here. Okay, in April, mid-April. Okay, price have a short-term bottom, rally a bit, and then come back down. So during the early February, March, right, it caught the bottom pretty accurately. Okay, this was the bottom, this was the bottom, this was the bottom, this was the bottom. Okay, short-term bottom, short-term bottom, short-term bottom. Okay, and then price go back down. Again, I repeat, it does not tells you the magnitude, and it does not tells you the like the long-term reversal point. It doesn't. Okay, it doesn't. Okay, if you understand what I'm trying to say about this indicator, okay, just type OK in the comments. Okay, it doesn't tell you the magnitude. So right now it is again flashing the bottom right now. So there could be a rally within the next few days or so. I don't know. So yeah, and yeah. So right now the market is extremely bearish, crashed 2.22% already. Okay, crashed 2% already. Okay, can I understand or not? If okay about this, just type okay lah. Entertain me a bit lah. Okay, so it is once again there's a signal over here. The Nasdaq, yes, once again there's a signal today. In fact, the indices have a signal lah. Okay, so previously this Nasdaq also flashed the signal over here. Before 2022, the previous signal was in 2021, somewhere around here. So it also caught this low as well. All right, it also caught low as well. So it is as good as anybody guesses. All right, so whether it is going to be a low, I do not know. I'm watching the price action. So will I buy right now? The answer, it is no. Okay, I need to have a trigger. So there's no trigger yet. The trigger can be wash and rinse, okay? Or it could be, hitting the swing low over here, okay? And then do a false break and then we back up again. Then that could be the signal. So I'll be watching the market. I'll be watching the market, okay? So James is asking, under what circumstances do these stars come out? So this is my little secret. So I won't be sharing this proprietary indicator that I have. All right. So yeah, again, nothing is guaranteed. I don't want you to say that, hey, Alex said, this could be a bottom. No. I'm just telling you that the signal is flashing again. There could be, not 100%. Okay, you still have to watch your price action, and it could be a failure as well. It could be a failure. So price could just, continue to hit down like that. Okay, so don't take my words. I could be wrong, and I'm always wrong. So okay, all right. So right now everybody is looking at this swing low right now. Okay, for the S&P 500. Okay, this is the swing low. This is the swing low. Okay, so we are very near the swing low already. So I think there is quite a high probability. Okay. that we might go and test the swing low, maybe, I don't know, next week or so. High chance lah, okay? High chance, okay? Even let's say if price really do touch the swing low and rebound, okay? I think this star signal, it is still valid. It is still valid. Okay, so we are somewhere around there already. Can? All right. So Chai Sing is asking like, share your view on the VVIX. Okay, so the VVIX, previously there was a divergence, but right now it didn't work out and price actually break the low again, the prior swing low over again. Okay, and right now we are actually in a fear level, really in a fear level. So I can mark this out again like that. Okay, we are in a fear level. So as I mentioned, right, so VVIX, you can treat it as a overbought or oversold level. You can also treat it as kind of a fear, okay, or complacent. So this was taught by Bini, you know, also one of the speaker at the Market Insights Virtual Summit. So I got to know about VVIX from her also. All right, so at the top, when the level is at about 7 or 8 level, market is complacent mode. Okay, when it is at about level 3 to level 4, okay, level 3, level 4, we are in a fear level. So right now we are hitting near the lower zone of level 3. Okay, reading 3 lah. Okay, of course, the extreme fear was during the COVID crash. Okay, in 2020, where the VVIX ratio go to 2, okay, go to 2. All right, will the market go to 2? I personally do not think so, because yeah, even though today dropped a lot, right, the VIX actually, yeah, it goes higher up a little bit, but it didn't go a lot higher. All right, it didn't go a lot higher. One of the reasons is because a lot of retail traders, a lot of fund managers, they are already hedging the market, hedging their position. So they are overly hedged. They are already hedged. They are expecting the downside move already. So when they are expecting the downside move and they hedge a lot, right? They hedge a lot, right? Okay, which means that when the market comes down, okay, even further, they do not have so much fear because they are already adequately hedged already. Okay, so that's why the VIX, okay, it is VIX is still not spiking up that high yet. Okay, it's still not spiking up that high unless something black swan happen. Okay, something out of the blue happen. Okay, I don't know. When I say black swan, it means that we cannot predict one. Okay, I don't know. Maybe some like I don't know what's the event. It could be some nuclear war happen or don't know what. Okay, so something that we could not predict at all, something drastic happen, then maybe that could spike up. If under normal circumstances, that what we already know about the macro view, about the Ukraine war, that kind, about the China, kind of distress mode in the property market, or what. All these news are already priced in, so the market know about all this. Okay, so all these are not black swan event. Black swan event is something that we cannot predict at all. Nobody knows. Then maybe I think the VIX might spike until, I don't know, like 40, that kind of area. But right now, I don't think it will spike so high. Okay, this is just my personal view. Okay, all right. So is everything okay for you so far? All right. So later I'll show you some of my trade later. Okay, Okay, so these are, as I mentioned, I didn't do any equities trade, but I did do some forex and also commodities trade over here. So if everything is okay, just type okay in the comments so that I know that everything is good, everything is well over here. All right. So let me take a sip of water. So right now we have about 280 people in the room right now, both on YouTube and also on Facebook Live. All right. So give me a like, share, or comments. Liking is free, doesn't cost you money. Okay, I really need your support. If you enjoy what I'm sharing, just give me a like, share, comment. If you're on YouTube, do subscribe to our channel. Subscribing, liking is also free. Just click ding ding and you are done already. do support me. Really want to share this out to as many people as possible. Okay, so again, if you just joined me or just joined recently, only you might not know about this announcement that I made just now. So last week, actually, Pepperstone has a closed door event. So only for their premium members at the MBS. I was there as well. So yeah, so they have this face-to-face live talk over here, seminars, and this was the site over here. Okay, right now Pepperstone is going to give away this replay, face-to-face replay for free. So all you have to do is just head over to the link over here. I'll post the link in the comments, and you also can see the link on the scrolling bar over here in the screen. So click on to this sign up to watch the full video, all right? And once you click on the link, you will be brought to this Google form. So once at this form, just fill your name, email address, country, contact number, and you are good to go. So just a reminder over here, you will not get the replay instantly into your email. So from what Pepperstone told me, they will compile it together and wait until the 1st of October, then they will send the replay out. So once you fill up the details, all right, do wait for a while, okay? Don't be kanchong. if you never receive anything, wait for a while until October, 1st October, that they'll send out the replay to you. And once again, this is free. You do not have to buy anything. They'll send out the replay to you, okay? And the keynote speaker during the face-to-face session was Ray Barros, one of our speakers at our previously Market Insights Virtual Summit as well. Spark Liang, of influencer in Malaysia, and Karen Fu, FX trader also. Okay, and if you really want to make sure that you do not miss any of the Pepperstone talks in the future, okay, because they always give out a lot of free talks, webinars, content, etc. You can open an account at Pepperstone. Just click on the Trade Now button. Okay, you do not have to fund anything. You do not have to put in any money. Okay, opening a live account, it is free, but it gives you access to all the exclusive bonus videos, content that Pepperstone is giving out. Okay, again, it is free. You do not have to fund any money. So click on the Trade Now, or also to sign up for the account, or also the sign up to watch the full video. So once again, I'll post the link in the comments. All right, and once again, the Market Insights Virtual Summit is coming up in October. So if you click on the link, I'll post the link in the comments, or you can see on the screen. So this is the Market Insights Virtual Summit, okay, at the end of October, coming up real soon also. So keynote speaker, Tom Basso, all right, hedge fund manager, also the original market wizards, and I'll be giving you exclusive bonus also, bonus materials and reports. Once you fill out your name, email address, by early next week, I will send you the report to you. All right. So as I mentioned last week, I've already kind of did up the report already. So the report will be on this. All right. The ultimate ETF trading cheat sheet. Okay. So I've revamped it. I've added more ETF, updated one in a very nice format. So sectors, industry, thematic. Okay. All the ETF, the key ETF that you should be watching. All right. So total, there are about 250 ETF, indices, fixed income, countries, and such. And not only that, I'm going to give you this ETF cheat sheet bonus training video. Okay. So this is very useful as well. I hope you find it useful. I think it is useful. So once you register for this event, you will get access to these bonus materials way before the rest of the people. And most likely, if you register now, by early next week, you should be able to get it. Okay? Can? And sorry, once again, post the link in the comments. And yeah, as usual, we have Telegram channel and YouTube channel. Please do subscribe to our channel, all these various channels as well. So right now, I already covered the index. So just a recap over here. The index, okay, long-term wise, we are still in a downtrend. Okay, no doubt about it. Okay. So let me go through this, okay? So in case you don't know, if I add in my usual indicator, okay, we are below the cloud, below the central pivot range. Long-term wise, weekly time frame, we are also in a downtrend, okay? All right, but short-term wise, as I mentioned just now, all right, we are somewhere near, could be potential near bottom, all right? And looking at this swing low over here, where my proprietary indicator is also flashing the signal that it could be a bottom. Okay, but again, nothing is guaranteed. Okay, again, if you want to go long, do remember that we are still in a downtrend. So you need to kind of fast in, fast out, that kind. Do not expect that price will just rally all the way. Okay, I repeat, this is very important. I need to repeat a few times. We are in a downtrend. Okay, if you want to go long, to have a stop in place. Okay, manage your position. Can? Christina, what link are you referring to? Okay, the link is Tom Basil or the Pepperstone. Okay, the Pepperstone one, I'll post it in the comments. Also, the Basil, I will also post it in the comments also. Into 53 minutes. Okay, all right. So yeah, right now I'm going to share with you the some of the trade that I have done. Okay. All right. So as I mentioned, there's no equities trade. So this for the past 1 week, only, I only did 4 trades. So this is just to show you what I'm trading. Once again, I'm not a perfect trader. Okay, I have losses. So out of these 4 trade, I lost on Aussie Cat. So risk reward, okay, for Kiwi Cat, it is 1.75R. 1.75R meaning that I risk $1 to get $1.75. Okay, the risk to reward ratio. So Euro Swiss, okay, risk to reward is 1.8R. Aussie Cat, definitely I lose 1R. I also had a weak position. Also, I just closed before. I just closed it before this Facebook Live. So it is about 1R. So 1R, slightly more than 1R. Aussie Cat, slightly lesser than 1R. Okay. So overall, this week it is still positive. All right. So Stefan is asking, what is your time frame traded? Looking at the daily time frame, okay, execution wise is H4 hour, 4-hour time frame. It is very similar to what Bini is teaching as well. Okay, so let's go through one by one. So I hope you can understand, how I trade just for education purpose. So I also have losing trade one. Okay, right, being transparent over here, and very similar to what I've been teaching all the way above the cloud, above CPR and such. Okay. GSL said Pepperstone link is not working. I don't think so. Okay, I think it should be working. Okay, let me try again. All right. Yeah, it's working. Okay, I post the link once again. bit.ly/Pepperstone Talks. Okay, just click on the link. It should work. Okay, if not, if it didn't work for you, okay, try another device. It should work. All right, try another device. All right, or maybe you can wait for a while. Maybe, or I don't know, suddenly there's too many people rushing to the page. I don't know. So try a little while and it should work. Okay, can. So let's go through. I hope I can finish by 1 hour 15 minutes. That is by 12:45. So Kiwi Cat, let's go through the chart. Kiwi Cat, NZDCAD, Kiwi Cat. Kiwi Cat over here. So this is a naked chart over here. Okay, so just by looking at the chart, Kiwi Cat, NZDCAD, I remove this over here, horizontal line. Just by looking at the chart, is it on a downtrend or is it an uptrend? Okay, if it is up, type U. If it is down, just type down. Uptrend or downtrend? Just by looking naked at the chart. Very clear cut, right? I mean, you can just answer me and entertain me a while. Down or up? Very obvious, right? It is a downtrend, right? So yeah, thank you for all the answers. So if I add in my usual indicator, okay, very obvious one, okay, below the cloud, below the CPR, always resisted by the CPR, break a little bit higher, then come back down. Okay, so follow the trend. So if you're watching me, most of the time I follow the trend. So back to naked chart again. Okay, so where do you think I entered? Where do you think I entered? Over here. This week. I zoom into the chart already. Where do you think I entered? Yeah, I think not enough time now, so I'll just go through with you. Okay, so I entered yeah, okay, at this bar over here. Okay, this green bar over here, somewhere around here. Okay, sorry, it's a red bar. The red bar. This is the wash and rinse pattern over here. So just to let you know my idea how it works. Okay, so this was the swing low, right? This was the swing low, right? This was the swing low. So a lot of time, traders will put a horizontal line over there. Okay, support area ma. Okay, prior swing support area over here. So so let me try to do a replay. I think that will be easier. Okay, so this was the prior swing. So price hit double bottom, okay. Price right now is, imagine we go back in time, replay, hit here over here, right? Okay, so right now like that. Okay, oh, so this is the play button. Sorry, not like that. I don't want this. I want like this. Okay, so it's like this, right? Okay, this was the support. Go like this, go up, go like this. Okay, so we break already. Okay, so go like this, and go back up, like that, go back up. So there will be people who want to think that this is a double bottom and this is a false break and price break below the prior low and then flush back up again. So at that point in time, okay, there will be traders who go long. Understand what I'm trying to say? Who go long. All right. And then the next day, there is a wash and rinse. Can you see or not? Next day goes up again and suddenly flush back down again. So this is a wash and rinse pattern. So wash and rinse already. So this was the day where I went in. I zoom into the 4-hour chart and then I go in. That's what Bini has taught. Okay, zoom in. All right. And then this is where somewhere near the low, quite soon. Okay, somewhere near the low, I managed to exit. Okay, and do you remember what was the number one candlestick pattern that you should be skeptical of or not? Okay, yeah, this is the pin bar lah. Right? This is the pin bar or not? This is the pin bar. But I already exited already lah. Okay, I exited already. But just to share you, this is the pin bar, right? Okay, you play again, pin bar. People think that, oh, it could be a good time to go long, and then come back down again. So I don't like pin bar. Especially you are against the trend. So yeah, so I went in here, okay, exited somewhere around here. So risk to reward, it is about 1.75. So good enough, exited. So this is a case study. You know my thought process. I think I explained it quite clearly. Okay, I didn't tell you the exact trigger how I enter. Okay, this is not what I'm going to share with you, but know how I read the price action. This is more important. Follow the trend, read the price action. This is more important. Okay. Euro CHF. Euro CHF over here. Again, without looking at the cloud and other indicator, this is obviously in a downtrend, right? No need to say one. So again, I am following the trend. I do not try to catch the bottom. All right. So again, where do you think I entered this week? Okay. All right. Where do I think I entered? Can anybody tell me where I entered? And do you see any pattern or not? Do you see my number one skeptical pattern that I don't like to trade one? And when I see that kind of pattern, right, I'll be very skeptical. And I think my chance is there. All right. Pin bar, right? So this is once again the pin bar. Right? This is the freaking pin bar. All right. So those newbie trader, amateur trader see a candlestick pattern. Wow, pin bar, hammer, very excited to go long. And especially they see the this swing low over here, okay, and then they see a support over here. Pin bar at a support. I go buy. Pump. I go buy. Then go buy. All right. Wylam, you are right. Wylam. That's right. I went in at 19. Okay, 19. This was the bar that I went in. Okay, this was the bar that I went in. So again, I zoom in. All right. Pin bar, most likely they put their stop over here. They enter here. So let's say if they want a risk to reward 1:1, right? That any price need to go up above here. About here. Then they can get risk reward 1:1. But didn't. Okay. So price just go like that. So once again, there is a wash and rinse right now on this day 19, and then price flush down. Okay, this was the wash bar, and then this is the rinse bar. And once again, I entered at the rinse bar. And when I entered, I didn't enter at the day low lah. Okay, all right, I entered based on a 4-hour chart. So I entered much earlier. So I think somewhere around here I entered already. So once again, price did a dive down. Okay, pump. All right, I exited. So my risk to reward, it is about 1.8. All right. So yesterday I exited the Aussie Cat. Aussie Cat was a losing trade over here. But in hindsight, it was a right direction. Okay. But I stop was too tight. So once again, it is overall generally in a downtrend. All right. So there was a wash bar over here, okay, and then a rinse bar. I put my stops slightly just above the high over here, and then I can stop out. Okay, but again, I can stop out already. Then price go back down lah. So a bit wasted. If I put a bit higher, then I will not get stop out. But no choice. Okay, because I like to keep my stop tight. So when price just move a little bit, right, then I can get very good, decent profit. But no choice. Once in a while, I'll get this kind of thing. So no choice. So but eventually, if I manage to hold on, it will be in good profit right now. But so I lost 1 hour on that, and then the latest one was actually on wheat. This is commodities over here. Commodities today all the commodities also down a lot. Okay, is it wheat? Sorry, it's soy. Sorry, wrong.